Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 9th November 2023. Income Tax Department has enabled the electronic filing of Form 56F for the assessment year 2023-24. This form is crucial for claiming deductions under Section 10AA of the Income Tax Act 1961. The independent directors of Religare Enterprises Limited or REL have written to regulators such as RBI, SEBI and the insurance watchdog, levelling allegations of fraud and other breaches against the Burmans, which had made an open offer in September to acquire firm's control. That sets the stage for a potentially long-drawn takeover battle over a business that holds coveted licenses to lend, sell insurance, and operate as an intermediary in the stock market. REL owns 4 key businesses. Religare Finvest is a lender to small businesses. Care Health Insurance is a health insurance provider. Religare Housing Development Finance Corporation offers some loans, and Religare Broking is a retail stock brokerage. REL was founded and controlled till 2018 by the Singh brothers of Ranbaxy and Fortis, Malvinder and Shivinder, who had to serve jail time for fraud involving siphoning of funds from their companies. They lost control of REL due to the invocation of pledges by lenders. A board comprising independent directors was put in place to steer the company to safety and recover siphoned off funds. The board, led by Executive Chairperson Rashmi Saluja, has been successful and the market has responded favorably. Shares are up 1,085% from Rs 19.05 on March 31, 2020 to 225.81 at the close on Wednesday. The company currently has a market capitalization of Rs 7,415 crore. But now, the board has turned against the company's single largest shareholder, the Burman family. The Tata Group's acquisition of Wistron's manufacturing facility, which will make it the first Indian firm to assemble iPhones, is worth a total $750 million, inclusive of debt. The plan that was unveiled on October 27th had said Tata would pay $125 million, but that's only the equity check. There is another $75 to $80 million term debt in the target company that will now get loaded onto the acquirer. Additionally, there is a $550 million intercorporate loan given by the parent to Wistron India. The $550 million intercorporate loan was infused by the Taiwanese parent as an unsecured working capital loan in its Indian arm against receivables from Apple, the company whose products were being manufactured by the vendor at the Kolar plant that employs 14 to 15,000 people. The local Wistron unit is being taken over by Tata Electronics Pvt Ltd, which has a manufacturing plant in Hosur, Tamil Nadu. The Wistron purchase is expected to spur the next cycle of investments in the Indian electronics manufacturing ecosystem and signals the maturing of the country's contract manufacturing companies. India is slowly gaining from the recent global shifts in manufacturing, sourcing, and supply chains at the expense of China. A half a decade of disruption that has included trade wars, the pandemic, natural disasters, several supply bottlenecks, Brexit, the war in Ukraine, and increasingly assertive industrial policies is profoundly redrawing the map of global manufacturing for export. While US goods imports from China declined by 10% from 2018 through 2022 in inflation-adjusted terms, they rose by 44% from India, 18% from Mexico, and 65% from the 10 countries of the Association of Southeast Asian Nations.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.